The US dollar index started the new trading week with a decline after the United States issued weak construction sector reports on a Friday. The likelihood that the Fed Reserve will cut rates by 25 basis points in September jumped to 100%. Notably, the Fed Reserve will disclose its previous meeting minutes on a Wednesday. Additionally, the economic symposium in Jackson Hole will open this week. The speeches by the heads of the leading central banks might add more clarity regarding monetary policy outlooks. In the meantime, let us look at how the macroeconomic news scheduled for Tuesday and Wednesday, August 2021, might influence major currency pairs. You're watching Traders Calendar. The macroeconomic calendar for the first half of the week is not rich in events. However, it still has the potential to influence major currencies. For example, on Tuesday, two important reports will be released in the Eurozone. First, Germany will disclose its Producer Price Index (PPI) data. Considering that this indicator was recording deflation for an entire year, its rise to minus 0.7% from a minus 1.6% could be considered a positive signal for the euro. 3 hours later, the Eurozone will publish its inflation reports. On the one hand, inflation was rising amid higher energy costs. On the other hand, the consumer price growth slackened in the services sector. Also, the overall inflation slowdown could be explained by lower food prices. Consumer prices in Germany, Italy, and France accelerated, while in Spain they dropped. Such factors still point to surging inflation. Thus, an increase to around 2.6% would be viewed as a reason for the euro to strengthen. Given that the Eurozone's and Canada's central banks were among the first to start cutting rates, it will be interesting to compare the influence of these decisions on prices. In Canada, inflation is expected to remain at 2.7%, the same as the previous months. In this case, the Canadian dollar, which accounts for 9.1% of the US dollar index, is likely to gain value, thus pushing down its American counterpart. However, on the same day, several Fed Reserve officials will provide speeches, which could influence not only the Canadian dollar, but also other major pairs. Let us remind you that the release of the minutes from the previous Fed meeting in June could have a similar effect on the currency markets. Notably, the document will be released at the end of the trading session on Wednesday, and the day will begin with Japan's trade balance reports. The country's economy is export-oriented, with the United States and China being its main buyers. Meanwhile, imports have been declining due to the weak yen, so the advantage of exports over imports in Japan is predetermined. This ratio is called surplus, and in July it may reach around 330 billion Japanese yen. A growing surplus will be a positive factor for the Japanese yen. On Wednesday, Canada will also release its Producer Price Index data. Forecasts suggest it will increase by 0.2% year-on-year, reaching 3% compared to the same period last year. Climbing inflation will signal moderate strengthening for the Canadian dollar. Please note that the time of the publications is set in GMT +3. The next video review of Traders Calendar will be released on Wednesday, August 21st. We will monitor the market reaction to the above-mentioned reports. Subscribe to the channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.